Ramsey, great to see you.
Thanks for having me, Joe.
No, it's always good to catch up. I appreciate all the interviews over the years. So, you've been really kind, always explaining sort of key trends in the MSP market when it comes to mergers and acquisitions, et cetera. But um, I suspect most viewers are familiar with you, but let's rewind a little bit, just in case some viewers are new to you and Evergreen. How long, tell us a little bit about Evergreen's history, how long it's been focused on M&A in the managed services market, and how did it start? How'd you get here?
Yeah. We first started looking at the MSP market in 2017. We came across a company in Utah called Executech, liked what we saw, and then started to dig into the industry, read some of the service leadership reports, and started to get really excited about what we were seeing as far as the size and the fragmentation of the market, and really the big shift towards recurring managed services. So Executech and then another company called Wolf Consulting were the first two acquisitions that we made in kind of late 2017, early 2018. So it's been about 5 years now of being focused on M&A in the MSP space, and it's changed a lot over those 5 years. But
Yeah.
It's been a fun journey.
Well, and listen, Evergreen, to your credit, has helped to shape this market in terms of what the trends are. Now, Evergreen also is backed by private equity, and I don't know if I worded that correctly. So you tell me, how do you explain sort of the private equity relationship with Evergreen? What is the background there?
Yeah, we are backed by private equity. We're backed by Alpine Investors, which is where I used to work prior to co-founding Evergreen with my partner, Jeff. We both worked at Alpine, and Alpine has grown a lot. They're investing out of a $2.25 billion fund today. And when Jeff and I joined, they were investing out of a $250 million fund. So it's grown a lot. Their fund size has grown a lot, and their performance has been really industry leading in private equity. And so that's created opportunities for people like us to go kind of come up with a strategy like the strategy that we've executed on in the MSP space, and they've backed us to go do that. And we've since started a couple other strategies in different industries that are also backed by Alpine, but with the same kind of ethos that we've brought to the managed services industry around kind of a decentralized operating model and holding for the long term.
Got it. Excellent. Yeah. And to clarify for our viewers and listeners and readers, so there's Alpine, the private equity firm. There's Evergreen Services Group, which you represent. And to be crystal clear, Evergreen is not an MSP. It's more of a sort of an investment firm that helps to scale these MSPs, correct?
That's right. Yeah, we created Evergreen with the goal before we really committed to even investing in the managed services space. We just wanted to build the best possible home for businesses of all types, and mostly kind of small and mid-sized businesses. So that's kind of what drives us. We think a lot about like, what is the best home for businesses actually mean, and we try to organize and shape Evergreen to kind of create that. So that's kind of what we view as our mission is building the best possible home for businesses and their leaders.
Got it. Excellent. So fast forward, I think it's been about 4 or 5 years, you mentioned, since Evergreen Services Group got it started investing in MSPs. We're having this conversation at the tail end of November 2022. Where are you now? How many deals have you completed, roughly?
Yeah, we've acquired 57 MSPs now in about a 5-year period, and 15 so far this year. So we've kind of steadily ramped our pace each year.
Wow, 57. Okay. And then, as I've watched the evolution of Evergreen and your portfolio investments, for lack of a better term, I've sort of noticed these super hubs emerging, maybe 3 or 4 groups of companies sort of becoming regional hub MSPs, or how would you explain it? I'm sure I didn't get it quite right. How would you phrase it?
Yeah. I think as we've grown, we've sort of reorganized the business into kind of what you said, kind of 3 regional kind of constellations of businesses. So you have Westwood Technology Group in the West. You have Helix in kind of the Midwest and Southeast, and then you have Lyra Technology Group in the kind of Northeast and Upper Midwest. And we've kind of split Canada as well into East and West. And so DJ Dorff leads Westwood Technology Group, Tim Burke leads Helix, and Elliot Hyman leads Lyra Technology Group. And basically, I think of those three groups as kind of mini versions of what Evergreen was in the early days, where you have kind of 10 to 15 independently operated companies that are leaders in their given markets, and each of those businesses has a CEO and a management team, and really that kind of holding company. Those regional holding companies exist to provide strategic support and guidance, and finance and accounting resources to the operating companies. So that's been a cool evolution because it's created for Elliot, Tim, and DJ. It's created these really exciting leadership opportunities where really they're overseeing platforms that on their own would be really some of the largest platforms in the industry. And then as we continue to grow, I think the people within each of those companies will have opportunities to step up into leadership roles as well.
Got it. Okay. Now, I know I want to ask you some questions about 2022 trends and then sort of future watch 2023, what we expect to happen. But I do have a couple more sort of housekeeping questions for those viewers who have never engaged with Evergreen. So some more sort of general questions. If I'm an MSP owner and I entertain a potential deal with Evergreen, do owners stick around, or does it vary, based on the deal? I mean, what's sort of the thesis with Evergreen and the owners who are becoming part of Evergreen?
Yeah, it varies quite a bit. So no two situations are the same. Sometimes you have a single owner. Sometimes you have 3 or 4 owners. Sometimes each of those owners wants different things. So you really have to be kind of flexible in your approach. I would say in the majority of situations, though, it's a single owner MSP. That owner has been running the business for 10, 20, 30 years, and they want a path to sell their business, transition out of the business, but still maintain the legacy that they've built, still maintain the integrity of the business, and they want to see the business thrive, and they want to see the people well taken care of at that business. That's kind of the most common scenario. So in those cases, we will bring in a CEO. They'll maybe overlap with the founder for kind of a 6 to 12 month period, and they'll kind of be the next generation of leadership. So I would say that's the most common path. And then the second most common path would be an owner that wants to sell but stay involved in the business. In that case, they can either just stay involved as an employee running their individual business, or they can do that and roll a portion of their proceeds into Evergreen and become a shareholder in what we're building at Evergreen. Mm-hmm. And that's been a path that a number of folks have taken. And it's been fun to kind of build Evergreen alongside them. But those are kind of the two paths, with the first path being more common than the second.
Got it. Okay. So in terms of trends you've seen in the market in 2022, I know that's a really broad question because I feel like the trends are sort of evolving on a week-to-week basis. Suddenly we're seeing new trends, new ripples in the market in terms of where we're going with M&A. But what have you seen overall for 2022?
Yeah, overall, I think been, relatively similar to 2021. I guess I would say, like, since I've been investing in the MSP space, it was a lot more off the radar in that 2017, 2018 timeframe, and private equity in the MSP space was not non-existent, but it was just very nascent, and you didn't have very many private equity backed platforms. Today, you have a lot of private equity backed platforms, and you have new platforms being created, and it's been kind of a steady stream of that kind of increasing over the last 5 years. It felt like there was some kind of leveling off in 2022. In the back half of 2022, M&A activity, has sort of leveled off a little bit with like some of the inflation and interest rate concerns that people have. But it's not like fallen off a cliff by any stretch. I think people, there are still a lot of platforms being built that are doing bolt-on acquisitions. There are private equity firms with a lot of capital to deploy into creating new platforms, and you saw a number of those being created. And then there was also a vintage of kind of private equity backed platforms that were started 3 to 5 years ago that exited and got a new private equity backer. So I think that was kind of the other theme of the past 1 to 2 years, with some of these companies going from one private equity firm to another, and that'll continue.
Yeah, no doubt. And and I also want to put in context, I think what you're sharing here is you made the point, not falling off a cliff. Similar from me. I see it, and I think you'd agree. It's like this plateauing effect you're climbing a mountain for years and years with this MSP M&A activity, and the mountain keeps getting bigger, and you keep climbing higher on that mountain. And now I think we're reaching sort of a plateau area, but it's a really high number in terms of the deals we're plateauing at, and I think even I still see weeks where the market's still growing, but even if we're quote unquote plateauing here, there's a massive amount of activity in this market.
Massive. I think a big part of that is how many private equity backed platforms have been created.
Yeah.
So you see, like, what drives the steady stream is a lot of these add-on acquisitions. And there's so many of these platforms now doing that it kind of creates this steady stream of activity, and that just didn't used to be there, right? There weren't platforms doing that, so you're relying on just individual business owners kind of getting together and merging, and that doesn't kind of happen as frequently. So I think that's if you look at the activity relative to 2017, 2018. It's materially higher. Even in a what is relatively slow relative to like a 2021 or something like that.
Yep. And in terms of the magic term, I think, has been interest rates. Everyone's been wondering what impact, if any, or what are the implications of rising interest rates on the MSP market, particularly when it comes to M&A activity. Any key themes there in terms of what you've seen or witnessed?
Yeah. I mean, interest rates, I think I always think buying a house and with a mortgage is such a good analogy for buying businesses, because really there's kind of this similar element of you're putting some money down and you're financing the rest, and that financing comes at a cost. And if you just look at a year ago, with mortgage rates at 2.5%, what type of home, what you could afford to pay for a given home, versus with mortgage rates at 8%, what you can afford to pay for a home. This is the exact same dynamic exists with buying companies. And so when interest rates are higher, your debt service is higher, and therefore the lender can lend less to that individual company. And so I think with that, that creates, that has a kind of gravity effect on valuations of businesses generally. And I think what it really enhances the importance of is growth. Like you can't, you're buying a certain level of cash flow when the business is, when you buy the business. When interest rates are high, it places a premium on being able to grow that over time, because you can't just kind of rely on the business kind of staying flat and not growing in value when you have those level of interest payments. So that it's a big factor, and it just kind of like you've seen in the housing market, things haven't fallen off a cliff, but it isn't the same kind of frenzy that you kind of had in that for that period where, you know, homes were going way above list price, and, you know, you know, they would sell before they even had an open house.
Yeah. So for the sellers in the MSP market, have they gotten a little more humble or a little more realistic in terms of their valuation expectations? I mean, you're sitting on the opposite side of the table, right? You're the buyer, they're the seller. Is the distance between you smaller now in terms of what they may be expecting, what you may be expecting because of these interest rates?
Yeah, I think in some cases, yes, we haven't like adjusted our
Mhm.
valuation framework dramatically. Yeah, we've adjusted it a few times over the years, and started paying more for um, MSPs over time. But yeah, I think there's, you know, it really depends on the individual
Yeah.
seller, and also how serious somebody is about selling. A lot of times we talk to people and they kind of just want to feel for what their business is worth, and that's fine. Like, we've had those conversations with people for years,
Right.
and eventually led to a transaction when they were ready. So I think that you know, that's where you kind of tend to see maybe more of a gap, is when somebody is just kind of maybe doing more of a market check,
Yeah.
versus actually being committed to selling.
Gotcha. Okay. So that's the 2022 trends. Tell me a little bit, you know, without looking too far into the crystal ball, 2023, what are some of the key themes that you have in mind for the 2023 year?
I don't expect there to be like a big fall off in valuations. Like, I think it's going to hold steady. I do expect companies to come under a microscope a little bit more, and the bar for those valuations is going to be higher. So there's going to be an increased focus on quality. You know, we're not, the buyers going to be looking at, you know, what's your growth strategy? What investments have you made in growing the business? Like, do you have customer concentration? Is your business overly dependent on you as the business owner? There's just a lot of things that I think maybe have gotten overlooked
Right.
over the years, that anytime you have it, we saw the same thing during COVID. Like, all of a sudden people just start to pay a lot more attention and be a lot more discerning on quality. So I think that's going to be one one big trend. And so I think you'll actually see valuations hold up, but I think you'll see deals get done with you know, more like higher quality MSPs. And then I think the other, I wouldn't call it a trend, but like a thing to watch, is just the performance of the private equity backed
Mhm.
MSPs. You've had this sort of rising tide lift all boats, basically, where you could not grow the business, the platform that you put together, and still generate a good return because of the leverage and the expansion and the multiple.
Right.
Multiples don't expand. You have to grow the business to create value. And that hasn't been the case
Right.
for 5 years. And we benefited from that, and it's lifted all boats. But I think the thing to watch in 2023 and beyond is, now it's time to you know, actually perform, and you have to grow the business in order to be successful, not just kind of arbitrage multiples.
Yep. Yeah. No, I hear you. I hear you. Hey, one more theme or trend I want to ask about. I think it might have been 2021 or 2022. I can't remember which year, but I think you acquired an MSSP as part of the mix. Can you talk a little bit about how you're thinking about cyber across your portfolio companies?
Yeah, we've actually acquired two MSSPs, Virtual Armour in Colorado, and Hurricane Labs in Cleveland.
Mhm.
It's I mean, obviously cybersecurity has gone from, I remember my early conversations in the MSP space about how, you know, like, you know, no small business is gonna pay for, you know, MDR or any type of advanced like security offering. And it's gone from that to, like, you actually have to lead with cybersecurity now to
Right.
go win a new client. And so it's a critical part of what we do. In every kind of acquisition that we make, you know, we're focused on, like, one of our top priorities from like a value creation standpoint is, you know, selling advanced cybersecurity to to the existing customer base. And sometimes that's already in progress. Sometimes it's not at all in progress. And so there are kind of varying, varying strategies depending on the individual situation, but it is a key growth strategy for us. And we use, in some cases, we use, the companies that we've acquired as partners, but it's not right for every business. So we do still work with a number of third-party partners, third-party vendors to deliver a security package. We really leave it up to the individual operating companies to design the package that works best for them and their clients.
Got it. So in other words, if I was an MSP and I sold to Evergreen, on the one hand, I could turn to the two MSSPs that you've acquired. They're sort of now cousin businesses of mine. They could be a master MSSP to me. Or I may decide, hey, that package isn't the perfect fit for me. I already have these relationships with X number of security vendors. I'm going to go with that. It sounds like you got some flexibility there.
That's exactly right. That's exactly right. Yeah. I we're very wary to do anything that would diminish the feeling of autonomy of anyone running our businesses.
Sort of
the minute we tell them what security offering they need to offer to their customers, they don't feel like they own the results of the business, and it's their business. So that applies to security, but also a lot of other things like that.
Got it. Excellent. All right. Hey, so for viewers and listeners and readers who want to learn a little bit more about Evergreen Services Group, where do they go? Is there a particular website or email address? How do they reach out?
Yeah. Our website is evergreensg.com. And then my email address is first initial last name at evergreensg.com. And then I have two people on my team, Sydney Hockett and Alex Van Lent, who are entirely focused on the MSP space, and you'll see them at all the events that we go to and everything like that. And they're taking a lot more of a leadership role in the acquisitions that we're doing. So they're also reachable and able to connect as well.
Awesome. Well, thank you. And thanks for the update as usual. I appreciate it.
Thanks, Joe. Thanks for having me. Good to catch up.